Okay, so my name is Jea Yu, co-founder of UndergroundTrader.com, and I also work with Alpha 7 Trading Academy. I've been around for over 15 years in all markets, at the pulse of the markets. So when you hear a lot about high-frequency trading programs now, thanks to the 60-minute special about 2 weeks ago, um, it's hitting full transparency. And the law of the markets, of any markets, is that once you hit that full transparency, it's already too late. I mean, basically, as far as the HFTs and the algorithms are concerned, algo programs are concerned, they had their heyday in 2011. All right. Um, if someone asks me, Jay, what do you think of HFT programs? I tell them real simple. Okay, HFTs, what do? They basically kidnap liquidity and extort liquidity. They ransom it out at the highest cost. All right, so that's a double-edged sword, because if you're trapped and you're on the wrong side, then the HFTs make it worse because it's going to cost you more to get out of that position. If you're on the right side of the trade, that's great for you because the HFTs have just eaten up all the liquidity, and your liquidity is valuable. Okay, so if you're long and you get in and stock is just spiking because of these HFTs and these algo programs, you're in a great position. So for the most part, I don't have a problem with them anymore. Okay, the crazy stuff with the HFTs where they were spoofing the bids and the asks, um, that's pretty much gone away. That went away by itself, right? Because in any markets, once you have too much competition, it starts to weed itself out. And that's what's already happened with these HFTs and these algo programs. So I don't have a problem with them as long as I'm on the right side. All right. So anyway, I've been around for over 15 years. My latest book is Way of the Trade. When I put out Trading Full Circle in 2010, that was it. That was like my last kid. Because writing books is like it's like giving birth, and it's so painful. Um, when you put one out there, or that's my third one. That was it. I was not going to put out anymore. It was just too painful. My calves were like the size of boulders from sitting in right into the wee hours of the morning. But I came out with Way of the Trade because if you notice the title, tactical applications, tactical applications of the underground trading method, and that's something you got to keep in mind. Tactical application. See, you've heard of the cliche, the flaw lies not in the game plan, but in the execution. Right? And that's the same thing with tactical applications. How you apply the strategies and the methods, if that makes a world of difference. And because of the algos and the HFTs, the dark pools, the environment has changed. The landscape has changed. And those of you who attended the last webinar, Lightspeed webinar, you understand I talk about this new environment, which I call the thunder and tumbleweeds landscape. And when you trade, it's going to have a material impact on your trading as much as what you trade or how you trade. When there's a wet climate, that's when you have the most participants. You have your algo programs and your HFTs, right? You don't want to fight them one-on-one. You don't want to have a target on your back. And the only way you offset that is when there's a whole lot of other idiots out there too. The more participants there are, the better it is for you. The odds are for you. It's funny. Someone mentioned in my chat room, they said something about the markets, and I had wrote today, the market is nothing more than targets and carcasses. All right, and you don't want to be the target. You don't want that target on your back. See, when the participants thin out, then you're left with the algos and the HFTs. The volume thins out, and they are the apex predator. Because that's why you want to be real careful when the volume, uh, when the volume and the action thin out. That's what I call a dry climate. We get wet climates and dry climates intraday. We get macro wet and dry climates. Earnings season is upon us. Okay, that comes 4 times a year. That's the wettest tropical storm. That's the wettest climate you want to be in, and that's where you want to make the majority of your money. That's where you want to make the bulk of your money. When a stock gaps up big or gaps down big, you can pretty much bet one side is definitely trapped. And so because of that, you're going to get extra volume. You're going to get extra participants. And where there are participants, is opportunity. You know, they say where there's a will, there's a way. In the markets, where there are participants, where there are marks, okay, there is a way. So keep that in mind. You want to be where the action is. And if the action is not there, there's a reason why it's not there. There's a reason why it's not there. And it's because you got these apex predators, these HFTs, they pretty much own that action when there's no one there, and they're looking for a target, and you don't want to be that target. All right, so in the last Lightspeed webinar, I went over the rifle charts, how to set them up, and what they are. Today, I want to just go straight into the meat and potatoes applications of the rifle charts. All right, so today I want to go over some trade sequences. I basically just did the demo trades within a 1 hour time span. Excuse me, on Lightspeed on the rifle charts, and this is just to show you how if you have a good trading system or the methods, okay, that we teach at Alpha 7 Trading Academy. All right, these are flexible once you get to that point of seasoning level, the 3rd stage of evolution as a trader. All right, it does give you that freedom to be able to literally take a piece of just a raw piece of flesh and take a scalpel to it, an X-Acto knife, and carve out the meat. All right, and I'm going to give you an example, some examples of that. So a lot of this stuff may go right over a lot of your heads. All right, and that's fine. Hopefully it's something that's going to stimulate you, because I believe that everyone has a natural inclination to learn, all right, to want to learn. Okay, if you're new, it's one thing, but if you've been around the block and you've got holes in your trading, hopefully this is something that's going to help you plug in some of those holes and fill that gap, full circle. All right, so just keep in mind that what you're seeing is the tip of the iceberg. I'm going to tell you right off the bat. I know you've heard me talk about the iceberg analogy, where everybody sees the iceberg, the pretty iceberg, that big lump of ice floating on top of the water. And as people marvel at that spectacle, that big ice cube, understand that 80 to 90% of that is under the water. Okay, it's under the water. And the result of the proper training will allow you to break surface and create the byproduct of profits. And that's what's above the water. But in order to get there, you got to understand that you got to build a galvanized foundation as far as your knowledge, your skills, experience, and so forth. So just keep that in mind. All right, so just to review real quick, a trade sequence is composed of 3 parts. It's not just buy and sell. All right, prior to the trade, you have your pre-trade sequence, which is why are you making the trade? You're planning out your trade, your premises, your pattern setups, information, support, resistances, and triggers. And while you're in the trade, the monitoring, your entry, your monitoring, you should be constantly keeping an eye on how your stock is correlated with the benchmark index, the SPY or the S&P futures or the NASDAQ futures. You always need some type of a measuring stick in order to determine, first of all, how it's performing, number one, and whether there is some type of a correlation or a fade. Okay, and then your management, and then your exit, and then post trade. Hey, how did your trade go? That's not a matter of, oh man, I got in, I got out, took an 18-cent scalp, and 20 minutes later, man, the thing took off $1, dude. I got out too early. Well, okay, it goes back to, well, what were you prioritizing when you got into that trade? If you went in heavy because you had, let's say, a 5 and 1 minute dual mini pup, which is a short-term setup, okay, and you're going to get a magnified move, but you're going to get liquidity. But those type of moves are only going to be, well, it's obviously it's depending on the stock, but you know, you're going to get 15 to maybe 30 cents of a clear straight line move, and then you're going to get reversions and chops and stuff like that. So if you're taking the maximum size shares to your comfort level that you're playing, which is a scalp size, and you're selling into that liquidity for 15, 17 cents, okay, then you played it perfectly. As that 1 minute peaks out, exhaust pulls back, all right, what you've done is you played the risk-reward dance perfectly. And what that means, I'm sorry, the risk and probability dance, right? Notice how I didn't say risk versus reward. Risk is not versus reward, okay? Reward is a byproduct. Too many people focus on the reward so much. Once again, the tip of that iceberg, the surface, that's what they want, man. You know, mine, all mine. I want to focus on the reward, man. What's my reward? You know, it's either they focus on what's my reward or what's my stop. You notice people always say, well, what's the stop? What's the stop? Well, what's the stop? What's the premise to get into the trade in the first place? And if that premise backfires, if the premise fades away, then you're taking your stops. Okay? Understand, you should not have static stops when you're trading intraday, right? Because stock prices aren't static, and your indicators shouldn't be static. Now, it doesn't mean that you can't have some static components. You know, Fibonacci retracement levels; those are static. Pivot points; those are static. Okay, but you always have to have a dynamic component, which is what we have in the rifle charts with the stochastics. So let's go ahead and get started with these trade sequences. All right. So first up, we have. I hope you guys can see this. All right. WSM. That stock had actually gapped down on the day, and then it started to grind. All right. Now, what I have up here, if you guys can see, hopefully you guys can see, this is a 5-minute rifle chart and a 1-minute rifle chart and just a 1-minute tick chart. We have our level 2 screen. We have our basic order entry. All right. We have our orders here, and we have our positions. All right. Messed around with HLF, got chopped down 187 bucks, and now we're going into now on this particular day, the SPY was selling off, and you'll notice SPY's down $1.33. So let's go ahead and get started. All right. So SPY's getting romped, like I said. Let's back it up real quick. All right. So the 5-minute rifle chart, notice how the 5-minute stochastics cross up, and the 1-minute forms what I call a mini pup. All right. A mini pup bounce off the 20 band. So the momentum, okay, is turning up. Meanwhile, the SPY is selling down. So this is what we call a buy fade. So WSM is buy fading here, and we spot the buy fade. We spot the buy fade with the mini pup, and we're going to go ahead and take 1,500 shares to the long side, because the SPY, when you measure the SPY, SPY is near a coil area, a bounce area. On the SPY, at any whole number, the 185, the 85 cent and the 75 cent, that's always going to be a bounce area. All right. I'm going to say always, to a point of, I'd say 90% of the times on those initial tests. Now, notice on WSM, the 65 held a pretty firm resistance for a little bit, pulled back. All right. WSM held above that 80 band for extended duration of time, pulled back at a nice oscillation, and then across to the upside. So we're long 1,500 shares at the 65.21 level. I have a 1-minute mini pup. I'm looking for any upticks on the SPY. Any upticks on the SPY should be able to push this higher. All right. Now, there's a phenomenon that I call the Stinky Fives levels. And originally, I guess it has something to do with the options pricing. I call them Stinky 250, Stinky Fives. So all you got to do is just take any number, all right, and add 250 to it. All right, so well, any round number of 5 or 10 variations. So, for example, 10, 12, 50, 15, 17, 50, 20, 22, 50, 25, 27, so forth. All right, when you add 250, okay, you end up with what I call Stinky 250s levels. Now, when you get to a variation of the 5, so you go from 20 to 2250 to 25, 2750 to 30. Okay, so when you get the 5 numbers, I call those Stinky Fives areas. And what we do is we take the midpoint. All right, so for example, we take 50 cents above and below on the Stinky Fives area. So right now, a WSM Stinky Fives means that 65, and then you add 50 cents to the upside. All right, hold on one second. Okay, you add 50 cents, that's 65.50, right? You subtract 50 cents, that's 64.50, and then we add 10 cents, subtract 10 cents on both sides for slippage. So what that gives us is 65, 40, 50, and 60, 64, 60, 50, 40. Okay, those Stinky Fives levels, they're very big speed bumps. Number one, but there's speed bumps, which means that once you, whenever the round number breaks, like 65 breaks, and you get a spike up, that 65.40 is going to be a resistance. If they break that, 65.50. If they break that, 65.60. And that 20-cent range oftentimes is going to be a range that gets locked in. Now, as a speed bump, what that's going to mean is if it spikes up through 65.60 really hard, okay, it's not something that it normally does. So most of the times you're going to get some type of a reversion that's going to pull it right back down like a magnet back to 65.50 and perhaps 65.40. But when you know this, and I don't even need a chart for this, okay, whenever I get near the Stinky Fives levels, I already know that we're already going to step in front and try to bleed some out ahead of that 65.40. It spikes 65.40, great, into that, ahead of 65.50 and so forth. And like I said, my theory is maybe this has something to do with options pricing. It's just a phenomenon I see every single day. So right now, as this thing, as WSM is starting to spike, we're already exactly what I said about the Stinky Fives levels, replacing limit sell orders at 65.40 and 65.37. All right. Not to mention, we're nearing the highs here. Okay, so we'll go ahead and place those limit sell orders. Once again, Stinky Fives levels. Now, stochastics on the 1 minute has crossed the 80 band. It's stalling, and this is what I call a mini pup. Okay, the mini pup means that instead of peaking out and coming back down, it stalls, and you end up getting a slope up. I hope you can see that, a little slope up. When you get that slope up, that's when you can anticipate a climactic spike, okay? And on that climactic spike, well, the question is, all right, well, how far is it going to spike? All right, once again, I don't even have to look at a chart. I already know, hey, if you're telling me stocks at 65.30, I already know 65.40 is where you're going to get that first resistance on that spike. So notice how WSM spikes with that mini pup, right? We get filled on 500 out at 65.37, okay? And notice how we're getting close towards the highs here. Any SPY upticks, and you see the SPY right here, any SPY upticks should be able to get me out, to flush higher, because it's a buy fade. So we went ahead and filled the rest, okay? 500, 65, 65, 40, 43, and you can see the fills right here. So 37 was the original 500, another 500, 65, 40, 300, 65, 43. We have 200 shares left, okay? And notice how they overshoot it right here, all right? Now, the other thing is the SPY actually is peaked out on that spike and starting to come back down, so we got to be a little careful. Now, The 1 minute being up, that's great. That means it's in a squeeze. But once again, on any given day, at any given moment, 70% of your stock price's move is going to be correlated with the SPY. So got to keep an eye on the SPY. Now, when I see SPY trading at 185, 95, okay, what I'm thinking is, first of all, 85 by 75 is the coil area. So if they lean it down real fast, that 0.85, 0.75 area, okay, I should get a bounce on the SPY, which what WSM has to do is it has to hold up here long enough so that the SPY can hit that, slingshot off, and then continue to add to that buy fade, okay, and spike to the upside. The gamble is it's a game of chicken. If they come in and they whale through that coil support area and just destroy it, then all of a sudden that buy fade turns into a laggard sell, okay? So that's what we got to be careful of. So 1 minute, it's still forming that mini pup, and we see that the SPY, okay, is actually, wow, it actually overshot through that 185, 185.85 area. Now we got 185.75 nearing a test. Look how well this thing is buy fading. But once again, if that 1 minute turns and slips that 80 band, this thing all of a sudden becomes a laggard, and the sellers and the shorts come right into this thing. All right, but the beauty about the rifle charts is now look at that. We got the coil attempt right here. Okay, the beauty about the rifle charts is that it tells you, hey, this is getting pretty, it's getting pretty overextended here in the face of the market climate, the benchmarks. So we went ahead and we sold the rest out, 200 shares out, all right, at 65.29 because, frankly, the 1 minute's peaked out. The 1 minute comes back down. The question is, well, how far can it pull back to? All right, well, we already know we broke through that 65, which was a resistance. We're above there. Now we have, on the 5 minute rifle charts, we have your 5-period moving average. We have your 15-period moving average, okay? So the pullbacks can pull back to that 5-period moving average, which is back down around 65.08 for now. Okay, understand every 5 minutes it's going to uptick. So now look at this. Look at this. The SPY gets an uptick, and sure enough, WSM, all right, spikes back up. So we actually stepped back in 500 shares because we saw the SPY uptick. We stepped back in at what, 65.35. We're in the Stinky Fives area. Now I know when we're in the Stinky Fives area, 65, 40, 50, 60. Look at that. Look at these overshoots. Bam, overshoots, mini pup, and sold 65.55 for 20 cents. Okay, so we scalped another 20 cents because the 1 minute has a mini pup. All right, and we popped up to the upper Bollinger Bands. But most importantly, I already know, and we put our limit order in there at 65.55. I already know that if this thing pops 65.50, 65.60, okay, is going to be the extent of that pop. It's going to be that's what we call an overshoot. Now look at the SPY. SPY looks like monkey crap right here. SPY pulls right back down. You see that? So you see how they spiked it, and then as the SPY comes down, okay, they're pulling it back. Now here's the thing. As the SPY sells off here, okay, I'm watching WSM. 1 minute's peaked out. So naturally, I'm looking for a pullback, okay, to 65.40. Should break 65.40 unless the SPY holds its ground here. Here's a quick chart of the SPY. Look how ugly the SPY looks. All right. So SPY made a lean, pop, peaked, pulled back. This is what we call a make or break. All right. Now, the Stinky Fives areas also apply to the SPY. Okay, because the SPY 185, what does that mean? 185, 60, 50, 40. Those are going to be bounce areas to keep an eye on. So here's a chart of the SPY. We're flat now on WSM. We scalped two trades, okay, within that Stinky Fives area, before it and after it, on a beautiful, luscious buy fade with a 5 and 1 minute dual mini pup, which is what we call a Plan A setup. All right. So we scalped that for $355 in profits. Now I'm watching the SPY because there's a pattern or a three-candle formation, okay, market structure formation called market structure lows and market structure highs. And these are just pure price patterns, and they work based on your whenever you have an intraday high or low, that's the most powerful type of reversal pattern. All right, a market structure low is going to be where you get a new low, you get a lower low, and then you get a higher low. Okay, so whenever a stock makes a new low and then it makes a lower low, okay, then it makes a higher low close. Well, the high of that close, okay, is going to be what we call a market structure low trigger. And if that market structure low trigger forms, that's where you get the reversal. All right. Now, that's a lot to keep in your mind. All right. So the beauty of the rifle charts is you're going to find 90% of the times that 5-period moving average is going to be where that market structure low trigger is. All right. So now look at the SPY right now. Here comes the leans. Here we go. 185, 66, 67. And notice 185. Once again, we're nearing what, guys? The Stinky 5s area, right? 185.60, 185.50, 185.40. Usually if the SPY collapses real hard, okay, that 185.40 is going to be your, what I call a coil support. You can literally expect a slingshot off that level, okay? Penetrating that Stinky 5s level is one thing. Once you get into that Stinky 5s level, getting out of it is a whole other thing. So it's a whole other can of worms, okay? So it's going to be hard to break 185.60. Once it breaks it, it gets into that 20-cent range, and it's like quicksand. And it's very hard to get out of it. If it doesn't snap out immediately, it gets stuck there, and it chops there a lot. I mean, look at even today, you know, we were chopping, well, yesterday we were chopping literally all day between 185.60, right? On the SPY, 185.60 to 185.40, 185.30. All day the SPY chopped around there yesterday, okay? Same thing happens, 184.60 to 184.40. It's just a phenomenon. Now look at the 1 minute forming a mini inverse pump. This is your climactic lean down here now. And the SPY is, if the 5 crosses down, it's looking ugly. Okay, 1 minute's getting a mini inverse pump through that 20 band. But now notice something. Okay, the SPY, and this is where you have all the algo programs and these HFTs. They just love to come in on these low band mini inverse pump. They just love to come in and just spam these triggers. Okay, and you just got to adapt to that. So that's why you have the moving averages. They come in, they're going to try to jam it. If they peak it out, or if they peak it out, they can, once they peak it out and rejects the 5-period moving average, okay, then that buying pressure lets up again, and then the rug, then you get what's known as a rug pull. So you got these algos, they came right in and they jammed this thing, but we have a 5-minute 5-period resistance at 0.85. We have the 1 minute 5 at 0.71. All right, now we're looking, now we're watching WSM again. Remember the Stinky 5s levels, right? Remember? Okay, so now WSM managed, first of all, it managed to hold above 65.40 as the SPY made new lows, okay? That's very significant because when you talk about correlation with the SPY, well, look at this chart and look at what the 5 and the 1 minute looked like on the SPY when we were looking. Okay, completely opposite moving averages. That's what we call a buy fade. And so if a stock is buy fading, as the SPY is selling off, and not only, you know, you don't just even have to eyeball it, you can actually see it, okay, on your charts, because you have your moving averages that are uptrending on the 5 and the 1 on WSM and downtrending on the SPY. So if the SPY pulls up, what do you think is going to happen to a stock that's buy fading? The wind just reversed, okay, and the wind is on its back, and it's going to add more buying pressure to a buy fading stock. It's very simple, okay? So now watch the SPY, and we notice that the SPY, all right, it's still chopping, but it held above that 185.60. But you know what? All that aside, the most important thing here is that the stochastics are up through the 80 band. Most importantly, I'm nearing the upper range of that Stinky 5s level, okay? And notice the stochastics in the 1 minute during the pullback on the SPY to new lows, all it did was just pull back, test that 80 band, and start to coil up again. The 80 and the 20 bands are extremely significant, all right? You often hear people say, well, when it gets above the 80 band, it's overbought. When it gets below the 20 band, it's oversold. All right, that's partially true. But the 80 band is the stalwart, it's the vanguard of momentum. So when you get above that 80 band, if you're a bull, you want it to stay above the 80 band. If it crosses on the stochastics, pulls back, and when it holds above that 80 band, coils back up, that tells you the buying pressure is very strong. All right, it's very strong. The way I use my tools, our tools, okay, is a little unconventional. In other words, we have a setup called the perfect storm. It's the greatest setup. It's 90% probability. But you know what I really love about perfect storms? When they fail. When they fail. Okay, because I have a litmus test. I've got a very strong litmus test. And if this perfect storm fails, it tells me the other side, the bears, instead of the perfect storm forming, triggering, and getting followed through on the breakout, it tells me the bears are twice as strong. So when my sword bends, okay, what am I going to do? I'm going to jump on the other side because I already know it takes a hell of a lot of effort to reverse a perfect storm. And when you know that, okay, then you can react, or you should react, all right? But it's knowing what the tools are in the first place. That's the preparation part. All right, so anyway, we see the buy fade. We see the 1 minute coiling back up through the 80 band, right? We see the 5 minute crossing up through the 80 band. So we go ahead and we take 500 shares long on WSM. All right, now the reason why we're taking 500 shares long on WSM, okay, is simply because we're looking for the Stinky 5's upper range, 65.60, to break. So we're long 500 shares at 65.56, and we're basically making new highs here. I'm looking for that 65.60 to break, all right? And I'm already set up so that if this thing starts to get stronger upticks, then I'm going to add more. All right. Now look at the SPY. The SPY just did what, guys? It just pulled back. It actually just collapsed. Okay. So now the SPY pulled back. So now I'm long 500 shares, right, which is not a lot. However, since I have the rifle charts, what I do know, even without the charts, I know 65.50 and 65.40 are going to be my coil supports. I also have the 5-period moving average on the 5-minute chart, the 5-period moving average on the 1-minute chart. Now, here's a very interesting thing, okay? If I get a pullback to that 5-period moving average, okay, the market makers, the bears are going to come in and they're going to short, okay? The algos, the volume participation programs, are going to come in and try to short, okay? The HFTs are going to come in and short. Why? Well, the SPY selling off, number one. We're above the 80 band, so this is overbought, okay? So I run the risk of this thing collapsing, number one. However, because we already have a cross up on the stochastics, very rarely do you get just a firm cross down. This is our support, the 5-period moving average. And what I've noticed through over 15 years is that whenever you get the stochastics crossed up, and we are in an uptrend, and that 5-period moving average tests, okay, everyone expects this to break and the stochastics cross down, so they're piling in and shorting. If this thing does not break and doesn't get a candle close underneath it, and the stochastic stalls, then I get the SPY taking a coil, the buy fade continues, the 1 minute continues, at the 1 minute 5 test, stalls and continues to spike, okay, what's going to happen is the stochastics is going to slope up. That's what I call a mini pump, a mini pump. When that mini pump triggers on the 1 minute, that's strong. On the 1 and 5, that's twice as strong. When that triggers, what's going to happen is the high of the body of the counter candle. So you have your 4 green candles, right? Well, when you have green candles, your counter candle, the counter trend candle is going to be red. Okay, so you got your red counter candle right here. When you break the body high of the red counter candle, you're basically, every last short and bear that came in here to short this thing, they're all underwater. So when you break that and the stochastics stalls but doesn't cross down but slopes up, that's what you get, a mini pump. What triggers is short covering. Bam, short covering comes in, and then any buyers that want to come in off the fence. Now, take a look here on WSM, okay? 65.44, right? I'm nearing the Stinky 5's lower range. Look at the SPY, 185.58. All right, right off the bat, we know, okay, I'm not sitting here panicking thinking, oh my God, the sky is falling. I'm already knowing in the back of my mind, okay, the wind is near a coil area, 185.50, 185.40. I also know WSM is near a coil area, 65.40. But the most important thing is I'm watching the stochastics and the 5-period moving average. So as the SPY pulls back, I already know where it can coil. Look at that, 185.50, 185.49, 185.46. I already know that 185.40 is where that SPY is going to coil. Look at this. I'm adding 500 shares now on WSM because, and it's right at the Stinky 5's coil support as well. Okay, and it's still above the 5-period moving average on the 5-minute chart, okay? And look at the SPY, 185.42, 185.41, 185.40, 185.37, 32, 30, 29. Okay, now this thing is coming down real hard. But notice something. Notice something, guys. Instead of collapsing 65.40, what is WSM doing? All right, it's still holding the 80 band, testing the 1-minute 5, right? And it's actually uptaking. Okay, so as it upticks, I want to get in on this. So I add 500 more at 65.51, 65.49. I'm watching the SPY. Look at the SPY. It's collapsing. Now, first and foremost, SPY rarely does this. If it breaks through the Stinky 5's 0.40, okay, the 0.30, and this goes for every number. If you guys, any of you who play the SPY, you'll notice every time we break a round number to the upside, that 0.30 is a resistance. You can go by any round number to resistance, which means it's also going to be a support. Right? Whenever the SPY collapses to a round number, okay, that 85 to 75 cent level, that's your coil support. All right? So that also works on the flip side. So when the SPY leans this hard down, it is due for some type of a reversion. All right? Now, as the SPY gets a reversion, I'm looking for, well, what am I looking for? Look, SPY coiled off 185, 20 something. All right, it's coiled, and look at WSM, right? 65.50. It's already, WSM started uptaking prior to the SPY coil. You see that? Notice the 1-minute 5-period moving average right here. See that red candle? That's a counter candle. If I break that counter candle, this thing's going to make a mini pump. All right, if I break through that counter candle, it's going to make a mini pump. I already know through that 65.60 upper range Stinky 5's coil resistance. Once we break that, okay, we're out of this crappy quicksand range. SPY gets a coil. I'm looking for the slingshot and the breakout on WSM. All right, and once again, think like a short. If you're a short, okay, if you're a bear, if you're a market maker, and you're trying to, you're a market maker, you got your HF volume participation programs, okay, they're stuck on the short side here. And as the SPY pops, the natural thing is for WSM to break, okay, because it's been buy fading. 65.60 is going to be the key break. I'm watching the SPY right here. 185.40 was the prior Stinky 5's lower range coil resistance, right? Okay, so if we break back there, then we're right back in that 60 Stinky 5's area. Look at that. Okay, 185.43. All right, now the pressure's building. All right, on WSM, I need that 65.60 to break. Now look, I'm already placing limit orders here. Okay, at 65.64, 65.68. We're long 2,000 shares, average at 65.49. All right, 65.50. So I'm anticipating the break at 65.60. I'm sprinkling the limit orders to sell, 65.64, 65.68, all right? So look at the SPY. Now the SPY pulls back a little bit, okay? SPY pulls right back down a little bit, bounces off at 185.40s, it's fine. As far as WSM, pulls back, chops 65.40. Remember, this Stinky 5s level doesn't break that easily, okay? And I've still got that 5 minute in an uptrend. There's no reason to worry here unless that 5 minute, 5 period moving average breaks. Okay, but notice the tail, it pulled back, tested the 5 minute 5. Now, here's the other thing you want to keep in mind. These charts update every candle close. So every 5 minute increment, this thing's going to update. And a lot of times you're going to see something like this where nothing's happening. Then the 5 minute candle closes. That naturally does what? It ups the moving average, ups the Bollinger Bands, and it forces the action. Either it's got to break that 5 period moving average, or guess what? It's going to have to, the bids are going to have to lift. Okay? So the clock is the other thing you want to keep an eye on. Keep your third eye on the clock. Okay? Keep one eye on your stock. Keep one eye on the SPY or whatever benchmark instrument you're using, be the futures, the SPOOs, the QQs, for killing text, or the SPY. I just use the SPY. All right, and then keep your third eye on the clock. Okay, so now watching 1 minute, 5 minute 5 still holding up. Now notice the 1 minute starting to take a pullback here. Okay, so I'm watching the Stinky 5s area. Now, if they break through that Stinky 5s area, okay, if they break through the Stinky 5s area, which is what they're trying to do right now, they'll be watching the SPY as well. Okay, now look, we just got the uptick. You see that? I'm sorry, the 5 minute candle closed. Now, did you see what just happened? The 5 period moving average just moved higher. Do you see that? So now the 5 period moving average is right at that 65.40. Okay, whereas before it was down by 65, like 30 something. All right. So now, since the 5 minute just updated, we have a clear counter candle right here. Watching the SPY, and this SPY is still, oh man, this thing is still acting pretty ugly right now. Okay. So this is a situation now where these guys are going to have to make a move. I'm going to have to make a move. Okay. If 65.40 collapses, then I'm going to have to go ahead and start trimming down the shares. However, I also know that any upticks that I can get from the SPY, as long as we hold that 5 minute 5 period moving average long enough for the SPY to make a coil, and look how hard the SPY is coming down, 185.11, 185.12, and look how beautiful this thing is buy fading. Once again, Stinky 5s area, right? 65.40, 50, and 60. This is all buy fades right here. All buy fades. I'm watching the 1 minute stochastics now. If I get a 1 minute cross up, okay, if I get a 1 minute cross up, that is going to detonate the 5 minute mini pup. Now look at the SPY. SPY now just took a coil from 185.11 to 185.25. Did you see that? So the moment the SPY gets any type of a meaningful uptick, I'm going to start to get buying pressure that comes into WSM. A lot of that buying pressure is going to come from who? The shorts, from the bears that jumped in, anticipating a 65.40 break. All right, now I still have my limits out there, 65.65, 65.68, okay? And this is what I needed. Look at that, guys, the 1 minute stochastic. This can't detonate until the 1 minute trigger. This is the fuse. You can't have dynamite explode unless you have a fuse that gets lit, right? So here's our fuse, a 1 minute start trying to cross up, okay? SPY is, once again, it's still, it's still chopping, all right? It's still chopping. It's not making any type of a meaningful bounce here, okay? But this is just a way for you to also, contrast and measure how strong this buy fade is on WSM, okay? WSM, in all reality, with the SPY selling off like this, WSM should be down, in the lower part of this range. Should be down under 65. All right. Look at the SPY. Man, this thing is ugly. And look how strong WSM is buy fading here. It's still SPY fading. I have a 1 minute cross, and all I need is some stronger SPY upticks, and the SPY is still acting like a piece of monkey crap here. But at this point, we have if the SPY can't uptick for me, okay, what's the next thing? What are you watching with your third eye, guys? You're watching the clock, right? Watching the clock. 1 minute cross has now confirmed. Okay, you see that? It's a firm cross. Watching the SPY, watching the 1 minute. This is crossed up. Watching right here the counter candle. Counter candle. Boom. Now look at that. 85, 65, 60 breaks. Look how fast this spikes. Remember, the body high of the counter candle. Let me stall. All right. All the shorts that came in right here, they're getting squeezed right here. Our limits are getting hit. 65, 500 out, 65, 64, 68. Okay, those limits got hit. So 2 of the limit orders got hit for 14 cents and 18 cents. All right, and look at the SPYs. SPYs coiling back up. All right, at 185.25, 185.27. See, the higher the SPY goes, all right, the stronger my breakout. Look at that. So we have our 1 minute pup, our 5 minute mini pup. The mini pup forms when we break this counter candle high, which is right around 65.60. So when that 65.60 broke, this thing is squeezing to the upper Bollinger Bands and overshooting. And then we have the 1 minute cross up. And these are all the fills. We're just peppering it out. We had our limit orders in at 64 and 68 for 1,000 out. Then we got 1,000 left. And we're peppering it out. 65, 66, 65, 76, 65, 65, 73. Okay. Down to the last 100 shares. Okay. All right. Well, and we're out of the last 100 shares. All right. So throughout all that 22 minutes, okay, we went through 3 trade sequences. Our initial long, when we took the initial long, 65.21, okay, on the 5 and the 1 minute dual mini pups, 65.21 to scalp it out, okay, all the way up to the 60 Stinky 5's lower range, 65.40, 37. We had the limit order there, 40 and 43.50, and then when the SPY started to puke, we dumped the last piece of 65.29, 256 profit. We had a 5 minute mini pup and a 1 minute high band mini pup, long 500 shares at 65.35. Go ahead and spike that on the dual mini pups on the SPY uptick for another 20 cents out of 100 bucks. Okay, on the third trade, we were going for a stronger breakout. Why? Because the SPY was selling off so damn hard. Okay, SPY was selling off so hard, and when it was selling off, it should have been trading beneath that 65.40 area, but it continued to buy fade, buy fade, buy fade, buy fade, so that when the SPY finally coiled off the 185.08, when it finally coiled, it trapped the shorts. These are the bears. The shorts got trapped when the body high broke, which overlapped with the Stinky 5's upper range, 65.60, right? That triggers the shorts to cover, and we get beautiful buy side liquidity that comes in, and we're selling into liquidity. So understand also, liquidity overrides price, okay? Liquidity overrides price. So all we did was we sold into that liquidity. So the total profits on the 3 WSM trade sequences, 732 bucks. All right. Now, you may say, well, Jay, 8 cents, 15 cents, that's not a whole lot of money, man. I can't make money on that playing 100 shares. That's the point. Okay. The point is to get consistent with these scalps. All right. And then you increase your size. Now, you got to understand the stock, the underlying stock, and how it moves. Obviously based on the stock, okay, and the price of the stock, your nominal move, you're always gonna have some type of a nominal scalp type of move, okay, and that nominal move, something like on a Facebook, for example, all right, if it's during the opening sequence, Facebook, your nominal gains 20 to 40 cents is going to be your scalp, okay, as the day wears on, with the exception of anomaly days like today where it's up 3 or 4 points, okay, you're looking at on a 10 to 20 cent clear scalp type move with liquidity. All right. Now 10 to 20 cents on 100 shares doesn't sound like much. And guess what? I got news for you. Okay. You're not going to be playing 100 shares all your life. You should not be. The trick is to be able to scale in some size to get in and to get out. Okay, the risk and probability dance. In order to do that, you got to build your foundation. You got to galvanize your foundation as far as your skill sets and everything. Anyway, so that's how we traded WSM. And WSM was in a 20-cent range. Okay, but we took the scalpel to it. We were fully aware of the Stinky 5s area, 65, 40, 50, 60. We had our mini pups on the rifle chart set up. 5 minute was grinding higher. When the SPY sold off, that's what gave us our clue. And once we got that red candle, that counter candle, that's what powered it through that 65, 60 area. You got to keep in mind, these regulators, they come out and they ban short sales, right? Well, I got news for you. Okay, you need to have shorts in order for a market to move higher. And this is a prime example, because if everybody is expecting a bounce, you ain't getting one. If you got to have some people coming in and shorting this thing to take it down, okay, to go ahead and get trapped. That's the name of the game. This is a minus-sum game. Everybody can't be right. Everybody can't win all the time. It's a minus-sum game. And the key is being on the right side, obviously, okay, more often than you are on the wrong side. And being allocated to be right, to capture that rightness while it's still right, okay, for the for a piece of that move. All right, so that's our gain on WSM. Now, let's go back to the SPY. So as I'm watching the SPY here, okay, I'm noticing it's a little later on, the SPY's back up to that 185.50 area. All right, I'm going to pause this right here. This is what we call a market structure low, okay, where we have a new low. This was the new low, okay? We have a lower low, all right? On the 5-minute chart, okay, we have a lower low. And then this looks like a hammer, okay? And then we have the higher low. And it's the high of this low right here, right around that 185, 50, 53, 55 area. That's your 5-minute market structure low trigger. Now, the way to play a market structure low, if you're only going by price action only, is you take the long on the trigger, you trail the low of the second candle. Well, okay, that is a pretty hefty trail stop. Okay, 40 cents. We're scalping here. So now I can revert back. If you get a market structure low on the 5-minute, that's going to be more powerful than a market structure low on the 1-minute. But the 1-minute market structure low, okay, is going to give you the earlier entry. Okay, so I hope you understand that. All right, so there we go. 5-minute market structure low was at 185.57. That's the trigger. So in other words, we have our new low, our lower low, and then a higher low. The high of that green candle right here, guys, is 185.56. So it's one tick above that. 185.57 is going to be the trigger to take the long, strictly based on the market structure low trigger. Now, we also utilize the rifle charts, okay, which utilizes stochastics moving averages. So along with, naturally, we know about our Stinky 5s area, right? So we know 185.60 is a coil resistance. All right, so 185.57, that is testing. It's breaking. All right, so we're long 1,000 shares of the SPY at 185.60. All right, took long 185.60. Now, once again, remember how I said, it's kind of a pain in the butt to sit here and constantly measure these candles. That's why the rifle chart's 5-period moving average, you see that? Overlaps right with the market structure low trigger. Okay, so we're long 1,000 shares. Now, here's a nice part here, okay? We got the uptick. Number one, we got the candle close. we have a new candle that opens up, and notice how when that new candle opened up, notice how the 5-period moving average, okay, we were trading above the newly updated 5-period moving average. That's beautiful because that's our support, okay? So we have our support right beneath us, and we're trading above the support area, and naturally we have that Stinky 5's break at 185.60. And keep in mind, guys, this isn't a coincidence. This is what the algos do. They will wait until the last 15 seconds and just jam this thing to get the candle close above and then above that 5-period moving average. So now that 5-period moving average, notice how it was a resistance here, okay, on the market structure low trigger, and notice merely seconds later, it is now a support because of the candle close. So we have the 1 minute that's bouncing, all right, and the 1 minute market structure low, you can pretty much measure that. Okay, you got your red, green. Okay, so you got your low, your new low, then your higher low. All right, and that higher low, the high of that higher low, that's the 1 minute market structure low trigger, which looks like it was closer to around like 185.40. Okay, so that 185.40, that's going to be, that would have been your long if you simply utilize a 1 minute market structure low. But if you want confirmation and stuff, you want a safer entry, then you're going to wait for the 5 minute market structure low. All right, so we got our initial uptick. We're trading above the 5 minute 5. Okay, now as far as, you know, where's my stops going to be? Well, first of all, I already know this is a Stinky 5s area, and you should know it's a Stinky 5s area. So I know 185.50, 185.40, there's supports. But here's the other thing that I'm watching for, all right? Instead of getting a straight stochastic bounce and then a sharp spike up to tighten, this is what I call tighten the channel, okay? From the 5, we base, then we tighten the channel to the 15, which is around 185.84 for now, okay? Instead of getting that straight spike, if we don't get that straight spike, okay, we have a silver lining here. And that 5-period moving average, since we're trading above it, what's going to happen is if we test that 5-period moving average and break it, and the 5 minute crosses down, okay, then we're screwed and we're taking a stop loss, because then this turns into what I call an inverse pump. If they test that 5 just once, all you got to just test it just once, okay? And if it tests once and bounces, that forms a mini pump, all right? Now if they test it once, bounce it, and you notice how the 5 starts to slope up, that's an even stronger sign, all right? That's a stronger, that tells me that the bidders are actively bidding up the SPY now. So I'm not worried about a pullback here, okay? Because if I get a pullback and I test that 5 and coil off it, that's going to tell, that's signs that we're going to get, that it's an even stronger setup. Because a stochastics cross up, that's one thing. A stochastics that forms a mini pump, that means that the bears came in and they already tried to take out that 5-period moving average, and they couldn't break it. And when they do that, the bears get what? They get trapped. And when bears get trapped, what happens? They get squeezed. And when they squeeze, what happens? Liquidity. Okay? Buyers come in off the fence afterwards. They always come in late. And what are you doing? You're selling into that liquidity. So here's our bounce here still. The 1 minute's making its full oscillation, forming a high band mini pump. And with each candle that closes, okay, I'm also watching the 15-period moving average, because technically that's going to be a target. Now, it's 185.84 target now, okay, but once that 5-minute candle closes, this thing's going to come lower as well. Remember, nothing is static on this rifle chart. Moving averages are moving, Bollinger Bands are moving, and most importantly, your stochastics. So the 5-minute 5 is right, it's right around that 185.48, 185.50 area, which is still our Stinky 5's support area. Now, the only thing I got to be worried about now It's not a small thing, but is the 1 minute is starting to get a little toppy here, okay, which I got to be careful, because if they slip that 80 band, right, that's where I can get into trouble if I stick around too long. So now notice how the SPY is starting to lean down here, getting near that 185.50, 185.48, which is where the 5-minute 5-period moving average is. All right, so look at this. Now we're testing it. We just kind of kissed it. Just kind of kissed it. And notice the stochastics here on the 5. Notice the 1 minute starting to peak out here. Okay, showing an 80 band test. And look what they just did. They just spiked it right off the 1 minute 5 of the 5-minute 5-period movement. Did you see that spike right up through that 185.60? What does that tell me? That tells me these buyers are strong. We tested it, we coiled. That also tells me this is a mini pup. Now the 5-minute has a mini pup. The 5-minute 5 has been proven. Okay? And the 1 minute, if it coils off that 80 band, that does what? It's going to trap the bears. Because the bears are coming in, and they're expecting that 80 band slip to get an oscillation down. They tease, take it down to the 80 band, and they pop it off the 5-period moving average. If they cross the 1 minute back up, the bears are screwed. We have a 5-minute mini pup, and then we have a 1 minute that's going to form a pup breakout, because it will pop up through the counter candle on the 5-period moving average. All right, so now they're still testing that Stinky 5s area. Remember, like I said, that Stinky 5s area, that's no joke, okay? Look at this. They're still testing it, and now we get another test here on the 5-minute 5. Okay. Now, if we can get a red candle here, that would give us a counter candle, a firm counter candle that would officially set up the mini pump. All right, here we go. Look at that, 185.50. They tested it briefly. They're still trying to hold it. The 1 minute's trying to slip through that 80 band. Now the bears, this is really sucking the bears. All right, now stop right here. Look what happened. We just got the 5-minute candle close. Just got the 5-minute candle close, right? Now we have that red counter candle. You see that red counter candle? Okay, right there are your bears. These are your party poopers. Notice how the 5-period moving average is starting to slope up here. Notice the stochastic stall here. Now the 1 minute's coming down. There's no doubt about that. Okay. However, understand stochastics don't measure. They don't measure price, exact price. Okay. Time is involved with stochastics as well. Okay. In fact, if you ever look at any stock that's not moving, just take any crappy bulletin board stock that doesn't trade. You'll notice the stochastics still oscillate on that thing. Okay. So keep that in mind. Counter candle, now the writing is on the wall, okay? Now the bears, they may think, all right, we got a red candle now, we have our work cut out for us, let's push harder. 1 minute's starting to come down, let's push harder. Now, check this out. I've added another 1,000 shares of the SPY, all right? And the reason for that is I have a very clear counter candle now, right here, okay? When I break the high of the body of this counter candle, and I get a 1 minute stochastics bounce, that's going to trigger the 5-minute mini pump officially. And when that 5 minute forms a mini pump, you can close your eyes and basically know where the next target is. All right? And some of you might close your eyes. It's going to be your 15-period moving average. All right? That's the next target. Why? Because that's a channel, and we're tightening, and it's forming a mini pump. Is the SPY still in a downtrend? Of course it's still in a downtrend. 5 minutes trading underneath the 15. Okay? So why are we long? Because we're getting a channel tightening, meaning they're closing the gap from the 5 to the 15. And I'm just looking to take a piece of that move on the 5-minute mini pump. Look at the 1 minute stochastics here. Okay? 1 minute's trying to coil up. The bears are saying, no, 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 please don't. Don't cross that 80 band. and the bulls are saying cross that 80 band, and then we're going to detonate this thing. We broke the counter candle. Okay, got a 5-minute mini pump, but once again, someone's still got to light that fuse. We got to light that fuse and get the 1-minute stochastics to cross up and through the 80 band. All right, and look at that. Okay, and if you guys have a, if you have a watch or anything, okay, that's what you can watch. Keep an eye on the clock. So now I'm going to go ahead and throw in some limit orders. 500 at 185.73. Okay, as it's trading at 185.70. Here's our 1-minute cross. Here's a 1-minute cross. Okay. And 185, what is it? 185.80 is the 15-period moving average. Got the 1-minute cross up now. Now, once again, you might think 1-minute cross, that thing should have jumped. What are you talking about, Jay? 1-minute cross, get a little spike, get a pullback, and then if it holds that 5-period moving average, it tests and holds a 5-period moving average and then bounces, that gives me a 1-minute mini pump on top of the 1-minute pump, which is then called a double-barreled pump, okay? Because I have a mini pump that forms when the 1-minute 5 gets tested and bounces. I have a pump that forms when we break the counter candle and close back up above a flat 5-period moving average. So now we test it, we coiled it, okay? 1-minute pump is here. All right, well, test, coil, pop, will form the mini pump. And then the 5-minute, that's still in a mini pump. And once again, keep an eye out for the candle closes. Okay, keep an eye out for the candle closes. As we get closer to a 5-minute candle close, what's going to happen? If there's no action, the moving average is going to force that action. It's going to force it. If the stock's trading up, it's going to force it by closing with the candle close. The 5-period moving average is going to slope up. Okay, boom. There's our mini pump. Sold 500 shares at 185.72, 75, 77, 81, and 80. All right, well, that's what's going to happen, guys. All right, so hey, here's our mini pump. Here's the 1-minute pump plus the mini pump. Okay, and notice the spikes. Now, keep something in mind, guys. Okay, remember what I said about the 85 to the 75 level on any round number when the SPY slips through a round number. So SPY breaks 186, it's going to hit 180. It's going to usually coil off 185.85 to 185.75. Okay, 90% of the times. All right. Well, guess what? That also applies on the upside, 75 to 85. When you hit those areas on a spike, you're going to get resistance at those areas without even looking at a chart. But here's our 5-minute 15-period moving average. We're overshooting 185.80, and we went ahead and bled out. So 185, 72, 76, 77, 81, 81, and we're just peppering out the rest of the moves, or the rest of the coils here on the spot. Now, now you see that 1-minute pump, perfect. Mini pump, perfect. 5-minute 15 overshot, perfect. 180, 80s. Okay, and locked out. So that's our SPY trade sequence. We took what's known as a Plan A, B long for 2,000 shares at 185.50, and actually we took 1,000 shares at 180. Well, we took 2 entries on this. All right, so we took 2 entries to go ahead and average it at 185.50, and then we sold into the 5 and the 1-minute dual mini puffs, Plan A, B thrust into liquidity, 185.72 to 185.81. All right. So for a $329 profit, playing off the 5-minute and the 1-minute market structure low, plus the 5-minute mini pump and the 1-minute pump mini pump. This is what we call a Plan AB, a refined Plan AB setup. Okay. So that's another 329 gain. So overall, within that 40 minutes, we basically had over $1,000 in profits, okay, minus the HLF trade for $873. Okay, these are the opportunities that are out there. You can spot them every day. All right, they're out there every day. The key is being able to play them. And once again, you see the counter candle breaks on the WM gapper long trade. Okay, and one more thing, WSM was a gapper. Okay, so whenever you have stocks that gap up or gap down on an earnings report, that ensures that you're going to have, well, higher than normal participants. Okay, and goes right back to what I said before. The more participants you have, the more opportunities, the more carcasses there are. Okay, let me put it to you that way. So, all right, let me go ahead and wrap this thing up. Here's our 3 trade sequences on WM and our trade sequence on the plan AB trade on the SPY for 329. And there's your iceberg. 873 in profits in under 30 minutes, okay, around 30, 40 minutes. That's what everybody sees, all right? What I went over and what you guys patiently sat through and listened to was all the stuff underneath to get to this part, okay? And that's what it all boils down to galvanize your foundation. That is a trade sequence template. Okay, this is a part of the 4 stages of evolution. When you get to the season stage, that's when you're able to do that on a fluent basis. So, bottom line here is you can do this the hard way, trial and error, 10, 15 years, or everything's been put together for you at the Alpha 7 Trading Academy, our exclusive trader training program. Has over 30 hours of videos, over 700 slides, self-paced, and it allows you to go through this. We've already plotted everything out so that you're learning organically, progressively, and at your own pace. And this is how you build your galvanized foundation.